Assalamualaikum and good day. We are from class 5A. Today, we will present about the influence of COVID-19 of global currency. Before we start our presentation, let me introduce our group members. The first presenter is Siti Nur Afiqah binti Hairul. Second presenter is Amirah Aina binti Norizan. And me, Abdul Ruhaizat bin Ruhalid. Next presenter is Ayun Nazirah binti Nasri. And last presenter is Gabriela Erna Gabriel.
The world is hit by pandemic COVID-19, resulting in millions of deaths around the world. Governments from countries around the world are forced to take preventive measures to stop the widespread from killing their citizens. Government policies such as social distancing, lockdowns, and closing down business other than essentials has plunged the world into the deepest economic recession since the Second World War.
The economic impact to currency and international trade has affected different countries to a varying degree. The blow is hitting hardest in countries where the pandemic has been the most severe and where there is a heavy reliance on global trade, tourism, commodity exports, and external financing.
Currencies in different countries post-pandemic COVID-19. Brazil. Brazil is the worst country in Latin America to be hit by COVID-19. Since January 2020, it has 18,557,141 confirmed cases, with 518,066 deaths. Brazil real is the most depreciated major currency in 2020. It has fallen 30% in that year. Brazil relies heavily on foreign investment, and 2020 has seen many investors flocking to less risky markets. The Brazilian currency lost around 10% in the first quarter of 2021, revisiting its record closing low of 5.88 real per US dollar set in 2020. Between March 2020 and March 2021, the exports of Brazil has increased from 18.3 billion to 24.4 billion. The top exports of Brazil were soybean, iron ore, and crude oil. In March 2020 and March 2021, the import of Brazil has increased from 14.5 billion to 17.9 billion. The top import of Brazil were refined petroleum, vehicle parts, and vaccines. It seems that the depreciation of currency of Brazil real did not affect its trading activities with other countries, as still have positive trade balance of 6.53 billion US dollars in March 2021.
Next, I will explain about China currency, which is yuan, is being affected or impacted by COVID-19. China industry grew more slowly during this pandemic COVID-19. This crisis only affected in the first quarter, but in the second quarter until the end of the year 2020, the situation returned to normal. In the first quarter of 2021, economy China grew at 18.3% compared to the same quarter last year, which is 2020. Because of this COVID-19, yuan exchange rate has fluctuating, while at the same time remaining stable at a reasonable and balanced level. While many emerging market currencies have recorded few and unsatisfactory returns, but China has been a performer when having appreciated by 5.9% against the US dollar in 2020. On the month of April 2021, China currency, which is yuan, has strengthened 6.35 against US dollar during this pandemic COVID-19. Before this, China currency had weakened for 4 months and yuan record lower against US dollar at the end of March 2020.
Next, I will explain about Japan, one of the countries that affected during this pandemic. Hi. Firstly, Japan registered the first confirmed COVID-19 case on January 23, 2020. As 27 February 2020, the Japan currency has slumped about 2% against the dollar. As we know, the coronavirus pandemic has been a major factor slowing growth in a worldwide country. The slump in the yen has made worse by a surge in demand for the dollar as a higher yielding haven currency. According to BBC report, we can see that Japan also having a slow economic growth during pandemic. For example, Japan are having an economic shrink of 4% due to COVID in 2020. This country also having a depreciation of the yen during the COVID-19 period, which is equivalent to 0.588%. They improved stock market returns by 71% of average return. So, we can conclude that yen also look poised to unwind and advance spurred by demand for haven asset during this pandemic.
Okay, next we move on to our very own country. COVID-19 also gave a significant influence on the ringgit's value in Malaysia. This is due to the panic selling by investors seeking to avoid trading in the present turbulent market. The downturn in tourism in Malaysia, as well as the drop in global crude oil price, will diminish demand for the ringgit, lowering the value of RM as compared to US dollar. As of 27 March 2020, Malaysia Stock Exchange, Bursa Malaysia has plummeted to its lowest level in the past 10 years, dropping by a stunning 20.52% since the start of 2020. This occurred when investors began to liquidate their stock because they predicted more volatility in the stock market as a result of the COVID-19 pandemic. Moreover, the announcement of full lockdown in Malaysia beginning 1st June 2021 leads to the weakening of the ringgit Malaysia. This is because the government had limited the economies that can operate. Slow economic growth can bring lower inflation rates and the expectation for interest rate decrease. When this happens, foreign investors refuse to invest in that country, causing the demand for companies abroad to decrease, and thus the currency will drop significantly.
So now let us move to Indonesia country. Indonesia also one of the countries that experienced the heavy storm for their financial markets in March 2020 during the outbreaks of COVID-19 pandemic. Indonesia exchange rate rupiah began weakened from a position of IDR per US dollar due to this pandemic. According to the Indonesia investment article, Indonesia faces a high pressure on their Indonesia rupiah exchange rate because the foreign investors have moved. According to New ASEAN Development Bank, Country Director for Indonesia, Winfried Wickland, has said that Indonesia might have a strong macroeconomic fundamentals, but the COVID-19 outbreak has changed the course of the Indonesia economy. Indonesia faced the external environment decline and domestic demand weakened. Moreover, Indonesia also faced currency depreciation. Meanwhile, the current account deficit at 2.9% of gross domestic products in 2020 because the export earnings from tourism and commodities are deteriorating.
So, the conclusion of the discussion is this pandemic COVID-19 had a significant influence on the global currency. It is being intriguing to see the evolution of the COVID-19 virus as it spread throughout the world interact with the dynamic of currency rates. It is important for a country to focus on how to slowly to increase their gross domestic product. During this critical time, the government should play its role in order to adapt in this situation and establish a various solution to boost the economic growth of its country, such as stimulating the economy with deregulation and also by using infrastructure to spur economic growth. That's all from our group. Thank you.